have a lot packed into the next 1 hour of your business morning this Wednesday, the 27th of March. Hello, everyone, and welcome. I am Boston Omofai. Let's get started. The Central Bank Governor, Godwin Emefiele, yesterday outlined what he calls the new direction for the central bank monetary policy, handing the economy a temporary monetary policy easing with a 0.5% trim of policy interest rates to 13.5%, ending 2 years of hawkish stance. The MPC's decision of 6-5 on voting based on the steady macroeconomic environment, the temporary price stability that we saw since the beginning of 2019, the increase in credit to the private sector. 2 members of the 11-member committee, however, voted to hold rate at 14%. 1 member voted a rate cut of 100 basis points. None of the 11 members voted for a hike in monetary policy rates. So what are the highlights of yesterday's meeting? Trying to summarize it for you. Credit to the federal government was up 17.2% in the past quarter. Credit to the private sector, 6.41%. And then the MPC, of course, advises the government to rebase Nigeria's gross domestic product, which was last done in 2014. The body also calls for fast execution of the Economic Recovery and Growth Plan, the ERGP, to lift the economy, lower unemployment, diversify the economy, pass the petroleum industry bill, and reduce fiscal deficit. A lot there on the fiscal table handed over to them by the monetary policy yesterday. Meantime, the outlook on inflation from the central bank is that we'll see headline inflation slightly higher between March and May this year before tapering. Very big story there, isn't it? So that's the monetary policy. But again, let's take a quick one there. Well, let's listen to some of the decisions yesterday from the central bank as read out by the governor, Godwin Emefiele. Take a listen.
In the oil futures market indicate that oil prices will remain considerably above the federal government 2019 budget benchmarks. The committee therefore urged the federal government to strengthen the current revenue mobilization efforts as well as explore additional sources of revenue in order to improve fiscal buffers. It further urged the federal government to sustain its implementation of the ERGP while ensuring that growth is all-inclusive. It reiterated the need to concentrate efforts on addressing the problem of power infrastructure as well as support domestic manufacturing. The committee also called on all relevant institutions to address the menace of smuggling and dumping of goods into Nigeria and encourage the management of the bank to continue to explore available scenarios to deal with the activities of economic and policy saboteurs, including those involved in dumping and smuggling, in a bid to accelerate domestic production of goods in Nigeria. The MPC noted the positive moderate outlook for growth and the risk in the horizon. The committee also noted that, having achieved a relatively stable exchange rate with price stability, it is imperative that the monetary policy should explore the next steps necessary for enhancing growth, reducing unemployment, and diversifying the base of the Nigerian economy. It further observed that per capita income growth is very negligible, while aggregate demand remains weak. Aggregate output also remains below the potential output level, implying sufficient headroom for non-inflationary growth. The new direction has therefore become imperative against the backdrop of the aftermath of the general national elections and strong inflow of foreign direct and portfolio investments into the Nigerian economy. The committee urged for the speedy passage of the other aspects of the petroleum industry bill to fast-track the development of the value chain in the sector and create employment. It also welcomes the passage of the National Minimum Wage Bill by the National Assembly and called for its speedy implementation in order to boost domestic aggregate demand. The committee also observed that the performance of the monetary aggregates were below their benchmarks, indicating headroom for monetary growth. The MPC also noted the encumbrances and constraints imposed on fiscal policy and the associated vulnerabilities, as it has consistently failed to mobilize sufficient revenues to support development as enunciated in the Economic Recovery and Growth Plan, leaving room for continued debt servicing not previously envisaged. Against this backdrop, it is imperative for monetary policy to provide the much-needed leverage to support output growth and employment generation in the country. On a more cautious note, the committee expressed concern and sympathizes with the fiscal authorities over the growing fiscal deficit, external debt and debt services, as well as the need to closely monitor the public pronouncement process in order to improve efficiency in public resource management. On financial system stability, the MPC noted the improvements in key financial soundness indicators and commended the federal government for the settlement of debt owed to oil marketers, which has considerably helped in reducing the non-performing loans portfolio in the banking industry. The committee therefore urged the government to expedite action in addressing all outstanding contractor-related areas so as to improve the NPL position and stabilize the banking system. In addition, the MPC reiterated the bank's commitment to improve credit delivery, especially to small and medium-scale enterprises, while acknowledging efforts by the Central Bank of Nigeria in coordinating the de-risking of lending to the private sector through collaboration between the Bankers Committee and the NIRSAL. In its consideration of the best monetary policy option, the committee noted the need for all agencies of government to work hard, not only in consolidating the growth so far achieved, but also in ensuring that appropriate policies are put in place and implemented to create jobs on a mass scale, as well as diversify the economy in the proper direction. In doing this, the policy options facing the MPC at this meeting is a decision between retention of the current stance of monetary policy or a slight loosening at the policy rate backed by the substantial stability of the major macroeconomic indicators. The committee felt that given the relative stability in the key macroeconomic variables, there is a need to signal a new direction, and in which case we're talking about being pro-growth. In its argument, the committee was convinced that doing this would further uphold the bank's commitment to promoting strong growth by way of encouraging credit flow to the productive sectors of the economy. The MPC also felt that signaling through loosening by a marginal rate would serve to manage the sentiments in the capital flow markets owing to the wider spread in yields in the emerging market and developing economies relative to the advanced economies. Moreover, the real interest rates would still remain positive. Committee's decision. In the light of the above, the MPC decided by a vote of 6 out of 11 members to reduce the monetary policy rate by 50 basis points, that is 0.5%. 2 members voted to reduce the monetary policy rate by 0.25%, 25 basis points, while 1 member voted to reduce it by 100 basis points, which is 1%. 2 members, however, voted to hold MPR at its current level. 10 members voted to hold all other parameters constant, while a member voted to reduce the cash reserve ratio by 100 basis points from 22.5 to 21.5. In summary, the MPC voted to 1. Adjust the MPR by 50 basis points from 14 to 13.5%. 2. Retain the asymmetric corridor of plus 200 and minus 500 basis points around the MPR. 3. Retain the CRR at 22.5%. And 4. Retain the liquidity ratio at 30%.
Godwin Emefiele, the governor of the central bank, outlining the road to the new direction for monetary policy in 2019. One area in which Nigeria is making of course, some progress as well is the plan to build Train 7. According to a new report that we have, the $1 billion project will involve a number of areas in where you have local content. So the NLNG, which is the agency or the company midwifing this Train 7, as well as other trains that has been built, however, came together with the Nigeria Content Development Board to put some paper together on how to get local content well infused into Train 7. Let's take a listen to this report.
I think he's staying here, so I guess...
It's the sign-off ceremony of the NLNG Train 7 Nigerian Content Plan as officials of the Nigeria Liquefied Natural Gas Limited, led by its managing director, and the Nigerian Content Development Monitoring Board, converge in Abuja to give effect to the plan. The managing director of the Nigeria Liquefied Natural Gas Limited outlines the benefits of the project.
Well, we believe that this opportunity of Train 7 project is by far the biggest opportunity for us to contribute in this space. And we believe that today's opportunity is before us, is one that we will take, is one that we do not want to miss by any chance.
For the Executive Secretary of the Nigerian Content Development Monitoring Board, the sign-off ceremony is an attestation of good collaboration.
This event in itself is an attestation of what genuine collaboration can bring between a regulator and an operating company. I am delighted that NLNG, as usual, is setting the pace, not only in the midstream sector, but also in its commitment towards developing Nigerian content in the oil and gas industry.
Officials of ENI, Total, Shell and MPC at the ceremony pay tribute to the NLNG for its foresight. The high point of the event is the actual sign-off ceremony witnessed by the stakeholders. The NLNG Train 7 Nigerian Content Plan will form the operating guide for project execution and monitoring. It would also aid the maximization of Nigerian content deliverables in the project by giving first consideration to indigenous goods, services and human resources, including providing opportunities to Nigerian companies.